Hey guys, my name is James Mason with the Facebook group Transparent Traders. In this video, I have 3 stocks to watch for May 28th. And these stocks, this is to start watching them on May 28th because these moves will start, either tomorrow or kind of linger for the rest of this week. So before we go any further, all I ask is for you to hit that subscribe button to continue to receive content like this and anything else we have to offer in the future. So let's get into it. For this first ticker, this is ticker TSS. Here it is on the 1-year, 1-day chart. Zooming in. This is the daily candlestick for May 24th, which was last Friday. And let's start right here at the MACD. So complete reversal on the MACD. I mean, just a massive green candlestick right there. Obviously, RSI will follow that. But this thing had gapped up 13, almost 14% now at the close. It was higher than that. It actually reached 117. So what I would look for starting May 28th, and a lot of this will follow with how the market is just performing in general. So always remember to trade in the direction of the market, meaning if the market is being bullish, you trade bullish. If it's being bearish, you trade bearish, because when you start going against the market, things get tough. So if you want to follow the market, /YM. That is for the Dow futures. So back to TSS here. Now, with this being such a large, or not being, with it, having such a large PPS right here, and a 13-14% just gap up like that, that's too much. Now, what I would look for tomorrow, again, trade in the direction of the market, but I would kind of expect this thing to honestly print a red day tomorrow. And as this upper Bollinger Band kind of comes up here, I would expect the candlestick to go down and actually settle. I mean, if this is a red day tomorrow, this is what I would, look for right here. But I look for this thing to start off and make a red day tomorrow and actually go down and actually basically settle on the top of this Bollinger Band line. That's as long that I would take this in a short position, because if it does that setup right there, I'd immediately go long in it, because more likely it's going to bounce off that top Bollinger Band and create a new high, or at least come close to this again. But regardless, with options, you will get one heck of a premium if it sets up like that and you write it down and it bounces, and then you go long after that. Just buy time. Just remember that. Always buy time on your contracts. So that's the first ticker. The second ticker, HIDB. So here we are. Let me back out a second. 1-year, 1-day chart. So here we are. This was Friday. Look back here. There's a gap to fill. Now, it does not always have to fill the gap, but a lot of times it does, or comes close to it. So at this moment, we're right here, and this thing actually has potential to come back up in this range. Now, I would not expect it to come back up here to the $29 range. So what I would look for is if this thing started playing out, decent tomorrow without it actually selling off and just tanking or whatever after that. Whenever I would make my entry to go long here and write it up, I would honestly start to look to get out of this in the $26, $27 range. I wouldn't even try to risk it to take it to the top. It's not worth it, in my opinion. Now, it could potentially look something like this, where it had this major gap up, and then the following day it ended up red. Now keep this in mind for that last ticker I was talking about, where it goes down and touches that top Bollinger Band. That's what I would look for right there to happen. But with this could potentially happen the same way. Tomorrow could actually end up being a red day. Hopefully not. But if it does, that's cool, because we'll play this as it plays out. And if it does the same thing, starts printing a red day, I'll just write it down to that top Bollinger Band right there, and then I'll take whatever profits, reverse it, go long, and then swing that thing back up into those green days. So again, if this would happen to be a red day tomorrow, I would write it down. I'm not going to get greedy. I'll take profits when I can, just so it don't reverse on me. And then I'll go long and write it back up. And I would not try to test it too much past the $26, $27 range. So that's what I would look for right here. This is ticker HIDB. And the third and final one, this is ticker FL. So backing out, 1 year, 1 day chart. As you can see, let me zoom in a second, and I'm going to zoom back out. Had a major gap down. Now with that being said, minus almost 16%. That's a little bit too much drop too quick. So before go any further right there, let's look back right here. So you can see how these gaps end up working out. And they'll make a gap. For instance, this one right here, it gapped up. Well, actually, it gapped down right there and then gapped back up right here. But then they usually fill themselves again. That's what I was just speaking about. So I wanted to point that out to you right there, just so you can see how they kind of just fill themselves in over a period of time. So back to Friday, or May 28th. What I would look for here is May 28th. I would actually look for this thing to print a green day. Now if it does print a green day, I'll lock in those profits quickly, because this thing, probably print a green day, and after that maybe a day sideways or whatever. It's hard to tell. I'm speculating at this moment, but it's going to go up a little bit before it takes its next drop. Now if tomorrow did print a green day, I'll write it up with calls. I'll sell. I'm not going to swing this thing. And then I'll just keep an eye on this to kind of see where it tops out at, where it starts trading sideways at, and then that's when I would take a put position again and catch it back down just for a little dip. So those are the three tickers that I think will turn out to be good trades starting tomorrow, May 28th, and as the days go forward this week. So I appreciate you guys taking time to watch this video. I hope this helps out, and I'll see you in the next one.